Welcome to this week's edition of Northwest Quadrant Wealth Management's e-news. Well, earnings seasons have wrapped up, and it was a stellar earnings season, and we've highlighted a lot of the optimism and justifiably higher stock prices. It also looks like we're coming to some version of a pre-resolution to the war in Iran. We seem to be perpetually kicking the can down the road, and there's not really a definitive outcome quite yet, but there's certainly a lot of volatility, specifically in the oil markets around potential resolution, and there's headlines seemingly to massage markets higher late on at specific times and everything else. But as we sort of inch toward a resolution there, we then are trying to remind clients really, we perceive there to be a little bit of a rational exuberance around current stock prices in specific sectors. Many will remember Alan Greenspan back, I think it was as early as 1996, highlighting the irrational exuberance of market participants in the run-up to the tech telecom media bubble that finally popped in March of 2000. But our point to relay this to clients is, people in our profession tend to be quite cynical and skeptical as it relates to these kinds of stock run-ups, and we very well could be in the early innings of this AI-related market melt-up. We're starting to see some of those signs of irrational exuberance. Micron, headquartered over just outside of Boise, just made the fastest run to $1 trillion market cap valuation. It added around $900 billion in the last few weeks in market value. And quite frankly, it's still a cheap stock relative to a lot of other AI-related names, at least from a price to earnings perspective. But we want to sort of highlight the potential for volatility around perfection not being realized in the AI space. We talked about a month ago that once Iran war resolution came, that the market would shift back to the AI narrative. There's a certain religious fervor when you're speaking to technology folks as it relates to AI. Any disbelief that these investments will be made and not have not real net present values is sort of heretical at this point in the belief that AI is going to be this revolutionary technology. You're starting to see a little bit of pushback amongst CTOs in the technology space saying, maybe some of the spend isn't necessarily a net present value add for our business. But all in all, we think that investors should prepare for AI-related bad news in the months and quarters to come. We just want to caution you that when everyone gets this aligned to the bull side of the market, perfection's never realized.
Yeah, it's very hard to find a bear in the market right now, and that always in the short term makes us nervous. The other thing I would remind some of you that have been around a while and seen lots of markets is when fundamentals get really far detached from prices, it's no telling how long that can go. And so, we've seen it throughout history going back a couple hundred years when there's a detachment of fundamentals and we see this exuberance of prices, no matter what it is, whether it's houses or tulips or railroad or whatever it might be, it can get really far detached and we can see behaviors that get really crazy. And like Josh said, we still could be in the beginning part of that. So I think ultimately our message to you in this e-news is that we want you to get ready mentally, prepare yourself for some volatility to the downside. Now, we don't know where that's going to come from. Inflation could be higher for longer, right? We could have this inflation be stickier and stick around for longer, such that the Federal Reserve will have to start raising rates, and we know higher rates is not good for high asset prices. And so that in the short term is probably the most obvious thing, where we would have rates have to go higher from where they are now to temper some of the inflation problem. And so, but there's a million other things that could come out of the woodwork that could knock stock prices higher. And remember, if we do have a sell-off, even a 20% sell-off, that is ultimately good for the long-term health of stock prices. When they get way over their skis and stock prices get really expensive, that's when damaging things can happen, not just to the stock market, but to the economy in general. So we don't want you to think we're pessimistic. We're actually optimistic about what stock prices can do through the end of the year. But we don't think that comes without some volatility, some short-term volatility. And so we want you all to mentally prepare for when that happens and not think that this time it's different, right? Because it's not. So we're seeing a lot of echoes of the late 90s, where a lot of that money that got spent was spent for no reason. And a lot of the money that's being spent now will be just really go up in smoke. But that doesn't mean that in the short term it's going to reflect in earnings, because it certainly has. So as always, if you have questions about your situation or your account, give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.